You were listening to chartingwealth.com for Friday, the 11th of August, 2017. Well, we see stocks are way down for the day. The S&P 500 down 1.40%. The Q's down 2.15%. That's the biggest down day I've seen in a long time. And conversely, guess what's up? Bonds up 0.87%, gold up 0.76%. Let's jump right in, take a look at what's going on the weekly chart, then the 2-day, then the 4-hour on the S&P 500 is depicted by the exchange-traded fund SPY. What do we see happening here? Well, we were already in a confirmed downtrend. Remember how we've talked for weeks now. This was going on the, fourth week, where the market kept looking like it was trying to top higher and higher, but just couldn't get above 247 sustained. We kept telling you, it looks like this market is petering out, but we do not forecast. What do? We follow trends, and we are seeing a new trend being set. Now, we just have a spinning top so far, but what we see happening at this point is we do see now of course, we had over the last 3 weeks, actually 4 weeks, a run up. But again, it kept pounding its head at 247. And now we have a spinning top forming so far this week. What is a spinning top on our Heikin-Ashi candlesticks? It means, well, it looks like a spinning top. We've got a long wick on the top, a long wick on the bottom, and we have a short candlestick. Means indecision. Means a change in trend possibly. Now, as we delve a little deeper, we look at that 2-day chart, we see that the first day of the latest 2-day candle, the candle's not complete yet, it's just started drawing, but we see a reverse over going down. Looked like it was heading toward that, but did we jump in and forecast that? No, we didn't. Why didn't we? Because we had seen possibilities along the way and they never worked. They worked now. We were standing by, watching and waiting. We now have a significant crossover going down on the 2-day chart. So, well, I was about to draw it, but it's not done yet. That candle's going to complete itself on Friday the 11th at the close of the market. Now, can the market recover tomorrow and bound back up? It can retrace its movement. You can have a longer wick on the bottom and a shorter candle. But let's look at what's going on the 4-hour chart. The 4-hour chart crossed over going down back at 4 p.m. on the 8th of August and continued to trundle down. Had a bit of an up on the afternoon of Wednesday the 9th, but then strong downs on Thursday in both the morning and the afternoon. So what are we waiting for a jumping in point? Well, we like to wait for some type of pullback, either on the 2-hour chart or the 4-hour chart. People ask me, and I'm going to give the lesson a little early today, how do you decide which of the shorter charts to use as your trigger? What I personally like to do, what our team does here at Charting Wealth, is we look back in time and see how accurate those charts have been in assisting you in making that decision. It's particularly accurate. It's much more helpful to look back at other triggers that worked. Did they work lately on the 4-hour chart? Or did they work better on the 2-hour chart? You can find more triggers on the 2-hour chart. And again, if you're waiting for just a minor pullback to jump in, when the market starts crashing down, the last thing you want to do is jump in at a bad spot. But at the same time, you can't just throw in at any point, because guess what? You can buy on the low, like at 243.66. And if the market does recover, and it doesn't appear that it's going to be recovering, but that's going to require me to be a forecaster. Doesn't look like it's going to bound back up tomorrow, but it could. Why? In particular, we're in the summertime trading zone. So again, be careful. We'll continue to watch all this, give you some advice for your practice trades. Remember, we're not a stock calling service. We're an education firm. We want you to practice. And again, depending on how you want to get in, if you want to experiment on other ways to get in, you have other methods you've heard of, you want to try them. Please make sure to use our trade worksheet to be able to track everything about why you entered, what your thought process was, what the candles looked like, what the indicators looked like, why you stayed in, why you got out, and then track your profit. If you're going to learn from this, you've got to document it. That's why we give everybody who subscribes to the daily market review, we give you the PDFs, which include our weekly market worksheet, our daily market worksheet, and the trade worksheet. We need you to use all of those. Those of you who are new, please make sure to subscribe at chartingwealth.com. And of course, you'll receive our How to Read a Stock Chart video and the layout that we use at freestockcharts.com, which is the layout you see on the video that we do every single day. Now, let's keep moving through. Next, we're going to go to the Qs. Look at it on the weekly. Remember, the Qs never got as laminated with the blue PPO, the price percent oscillator, and the red signal line. And it always stayed in the red on the derivative oscillator. And of course, it cranked down today the most, 2.14%. Let's take a look at that 2-day chart. Of course, it has crossed over strong going down. And of course, that candle has not closed yet. It will be closing very soon. Well, at the end of the day on Friday. I say very soon. It's only a 2-day candle. Okay, what do we see going on? We saw the 4-hour chart cross over in the afternoon on Wednesday. Now again, yes, it did cross over. Did it mean the market was going to trundle down? No, it did not. It did not mean it was going to trundle down and keep going down. Just like when it crossed over going up on that 4-hour chart, didn't mean it was going to go up forever either. Why did we not jump in on the up movement? Because our weekly chart, and we have been saying this for the last many days, all things being equal, the market always tends to move in the direction of what? The largest chart. And it has finally done that. So again, we'll continue to monitor what's going on the 4-hour chart, the 2-day chart, and the weekly chart throughout the course of the next many days. And of course, what we'll be recording for you tomorrow at the close of the market, we're going to be recording our weekly comprehensive review and forecast. Gosh, I do use the word forecast there. I probably need to take that out. That's not a good word. We're trying to give you some ideas as to what's going on with the charts, but I probably need to remove the word forecast. I don't like that word. We are trend followers. We're not forecasters. Forecasters tend to be wrong. Why? Because they're trying to predict the future. And of course, we do that to some extent. I know I'm doing word games here, but I want you to really be focused on following a trend. It's much easier to follow a trend than it is to forecast what the market is going to do, because as much as we would like, we can't make the market do what we want it to do. Okay, let's go to TLT. That's the 20-year bond fund. It's up for the day, of course, as we've been saying, inversely related to the stock market. Typically, bonds are a safe haven. That's what they're seen as. And of course, it was consequently up. It is so far looks like it's going to be an up week, bouncing off the red signal line. The derivative oscillator is still in the negative. Maybe that'll switch over before the week's out. Not likely, but maybe over the course of the next week. Again, we're still in a confirmed up move, have been since the 7th of February on bonds. What's going on the 2-day chart? Of course, it has crossed over. First day of the latest 2-day chart. We'll see how that works out. We'll continue to monitor things on the 2-day chart. And of course, what's going on the 4-hour chart? It crossed over going up back on the morning of the 9th of August. So we'll continue to watch, see how these things go. Just do notice that bonds are really right around still sort of the 126 point. So again, we'll wait for a pullback there before we pull the trigger on any kind of entry. We'll keep you posted. Now, lastly, gold up 0.25%. And of course, gold has been in a confirmed down move. Looks like it's rotating over from that. We'll probably call a weekly vertical crossover at the end of the day on Friday. Those of you who subscribe to the text service will get that notice. How do you get that notice? Well, you go and you first subscribe to our daily market review. And with that are the instructions on how you can, for free, register to get our text service. We send out here lately, it's not even hardly been one alert a month, but some months it might be 3, might be 4. And these are weekly vertical crossovers, which are the best opportunity to jump into a move in the market when that weekly chart crosses over. Why? Because like we said, all things being equal, the market always tends to move in the direction of the biggest chart. Now, our biggest chart that we review is the weekly chart. Now, let's dig just a little bit deeper. Go to the 2-day chart. What do we see going on there? Well, of course, it crossed over going up back on the 24th and has been trundling up since then, except for 2-day periods on the 2-day candle ending on Thursday the 3rd and the 2-day candle ending on Monday the 7th of August. Those were down days, but other than that, had a lot of up movement in gold. Now, let's look at that prescient 4-hour chart. What did it do? Well, of course, it rotated over big time in the morning, going up. It switched over. It had been going down, actually bottomed out right before it turned over, bottomed out right around 119.12, and then moved back over, going up, and has continued to spike farther up. Those of you who are like the 4-hour chart is a total trading chart. Why do we chart the 2-day and the weekly? Because, again, this will be my third time to say it, I think. All things being equal, the market tends to move in the direction of the largest chart. If you track that largest chart, you're paying attention to where it is, and the 2-day chart in the interim, remember the 2-day chart, well, the 4-hour chart leads, but it takes a lot of 4-hour periods to finally rotate the 2-day chart over, and even more 4-hour periods to rotate the weekly chart over. But you can start seeing patterns develop on the 2-day. And then, of course, as you're watching those, particularly when you have such an accurate chart as the 4-hour chart, it can give you a heads up as to which way the market's going to correct to the strongest. Folks, that's where we are at the end of the day on Thursday, the 10th of August, as we go into Friday, the last day of the trading week, Friday the 11th of August. We so appreciate you being with us. Don't forget, at the close of the market tomorrow, we will be producing for you the comprehensive review and forecast for the past week and the coming week. So thank you so much. Make sure that you subscribe at chartingwealth.com. Also, please join us on Facebook, Twitter, Instagram, YouTube. Also subscribe to that YouTube channel. Any of those subscriptions help us a lot. They're all free, but they help us in the metrics. God bless. All the best from the whole team here at chartingwealth.com.